if you're, say you're setting out on a trading, maybe you just started trading and you're setting out on a trading journey, is like, how do you chart a course, or how do you set goals within that journey if you're just starting out, right? And you don't know anything. It's like, of course you want to make money, right? But that is it's not a sufficient goal to get you to your
Yeah,
path.
yeah,
So you need to have objective goals along the way that also, you know, embrace the reality that you don't. There's a lot of things you don't know, and I think the number one,
yeah,
that sort of ties into risk management, right? Because if you have a risk management profile that's really tight, then you're just gonna survive to learn those lessons, and that's really the fundamental starting point for if you're going to start a trading journey. You have to pull in that. I would say pull in that risk profile really tight, and then drop your ego too, right? Like,
yeah.
because we had a call last night. I was talking to Abraham about. He was talking about. Well, I was talking about the psychology of taking losses, and I did this experiment where I created a bias, and in the market, a very strong directional bias. And then I would go and I'd post about it in the Discord, and then tell other people in the Discord, um, what I thought. And then maybe even people would congratulate me and say, like, that's a great idea. And, and then I would go into the market and I would place a directionally opposite trade to that opinion that I had created and reinforced and attached my ego to. And the results of the experiment were extremely interesting, because I found that in those situations, when I had a trade on that was running in profit, that was running against my opinion, I was unhappy and I was upset. And when I had a trade on that was running in favor of against my opinion, um, I'm sorry, if I had a trade on that was running in favor of my opinion, but I was
Yeah,
losing money, I would
I got what you mean.
I was happy. So then I realized, like, oh well, maybe it's not actually about the P&L. Maybe it's about the ego and the opinion that you generated. And
Yeah,
that's
I
why I think
mean,
it's really important to trade volatility. It's like a real mindset shift.
I
Where
think so. Yeah, I think so too because it really fits what you are just describing. Because a lot of people, I think, they are really convinced that in order to make money, they need to be right. Okay, and yeah, of course, it's kind of logical that if you are putting on a trade and if you have a specific expectation on the market to go up and down, surely, if you are right, probably you're gonna make money. Yeah, that's the general belief. But I mean, I think the matter of conversation, it could be expanded, way past beyond that, because most of the time, being right or wrong, it could help you in the short term, but it could really damage you in the long run, right?
yeah,
These attachment to be right or wrong on the market.
yeah, and I mean, you can't even be right or wrong. I mean, it's not.
It's just statistics at the end of the day. So I mean,
Yeah, I mean, it's like
being right.
we attach a lot
You
of
know what?
opinions and egos to the market. Like, we attach meaning and different explanations to the market that just don't exist, right? It's just our way of
Yeah, I
processing
mean,
information.
you could you could see something happening to the market, and you could see something in price action to confirm your ideas or your thoughts or your bias, whatever. And at the end of the day, it could turn out that those stuff that just happened didn't have anything to do with what you were thinking of, right? So you never know. So I think somehow it could be misleading. Maybe not all the time, but a few times, a few times it could be misleading. Just building up something on this perception of you being right every single time, while most of the time And I mean, you were quoting Mark Douglas, and I think he's the one who goes out and say that in order to be profitable, you don't need what's going to happen next, right?
Yeah,
And that's a great, huge quote, and it's really something valuable to me.
yeah. I've got another quote from him that says, "When you achieve complete acceptance of the uncertainty of each edge and the uniqueness of each moment, your frustration with trading will end." And I think that's a
Yeah,
really it's a really important quote to dig into, because what people do is they tend to link whatever, say their whatever current moment the market is operating in, they tend to link it with another previous moment, right? And that link just doesn't exist, you
no,
know?
but it's just human nature.
Yeah, and so that's why I always try to focus on the right side of the chart as opposed to the left side of the chart. And it's not that historical price action doesn't matter; it does matter, but it's that what the problem is, like, for example, right, like, if let's say that the macro in Bitcoin breaks all-time high and starts running up, and you get that type of situation, people will naturally look for and expect a distribution pattern, right? Because that's how the last big top was put in, right? In spring of 2020, that's all in people's mind, right? That the you get remember February ran up. I remember
Are
the
you
yeah, and
are you
then
referring about the tree drive pattern of
yeah,
distribution?
the classic
Okay, okay,
Wyckoff
got it.
distribution in
Yeah,
spring.
got it. Yeah,
So everybody who was trading that will remember that, and they'll remember the pain of not trading it correctly, and then they'll link the future to that moment
yeah,
and expect that same type of distribution pattern. And of course, the same type of distribution pattern could play out, but that expectation and the association can cause problems, right? If it's not playing out and you're expecting it to, you know.
yeah. I
Um,
mean, I think I heard these words like expectations are made to be unmet. Yeah,
yeah, so I think, if you're, again, going back to, like, how do you, if you were to create a roadmap for starting your trading journey, one of the key principles of the roadmap is, like, how do you set a roadmap for a future that's uncertain, right? Well, you just have to factor in that uncertainty. So you just, like, one thing you could write down in your journal is that I don't know what the future will hold, right? I sort of, you're sort of like a, like a walking through blindfolded and grasping
yeah,
for the light switch.
yeah, absolutely. And I mean, it's kind of this is this is a thing that kind of resonates with me, and mostly because right this morning I posted a YouTube video in Function DM, was a video about Trader Dante, and I do particularly like one of his quotes, which is, well, essentially, what if you are a trader, basically you're gambling for a living, and you're basically you're basing your career on the value of your best bet. So I mean, I think that's a wonderful quote for a trader.
Yeah, man, you are a professional gambler, and there's no,
Exactly. Yeah.
yeah. So I think the other thing in if you're starting out on a trading journey is, like, just to kind of accept the fact that, whatever when you set out on your journey is going to be largely irrelevant as you progress. And so then it kind of is like, well, how do you operate knowing that? Well, again, it kind of ties into limiting your risk, taking obvious trade setups, right? That offer the greatest statistical probability with very low risk, and then expanding your time horizon. And this is really important too, right? Like, you want to. I've noticed that a lot of trading errors and trading problems tie down come down to trying to get rich quick, which,
Oh yeah.
new traders approach the market with that mindset. But if you just expand your time horizon, a lot of those. a lot of those trading errors you're making will just kind of disappear without much effort or resistance.
Yeah, I mean, it is a very interesting point, I think, because I totally agree with that. The the majority of the issues basically come from the willingness to get rich very fast, and I think there is a big problem on the underlying problem is that if you want to get rich fast, one thing you need to have is a decent account, a big enough account to allow those returns to be, realized in a very short term. Because, whatever your risk model is, if let's say you got, let's say, $1,000 account. I mean, whatever your risk profile is, even if it's really aggressive, would you expect to make, let's say, 10 grand in 6 months? I mean, that would basically means that you are really taking on so much risk, and in the long run, it's going to destroy you. And I guess the point is that a lot of people, they go out on the internet and they start to look around, especially on Twitter or whatever, and they kind of get in this spiral of, these guys posting, pictures of big cars and Lamborghinis and, journeys in
Yeah,
particular cities of the world, and you start to believe that that's the life, right? That's how you should do it. That's how you should live if you are a trader. But the point is that if you want to really be consistent and if you want to be profitable in the long run, you need to take a choice, and you need to have two options. One, it is found a decent size account, and therefore you're going to have a decent return compared to the risk you're taking. The other one, of course, if you don't have those money to commit in a trading account, is commit to the long haul. And I guess that's the problem.
yeah, definitely, man. Um, there really is no way to get rich quick, right? So I guess it sort of how do you start your trading journey? Well, you reframe everything from offense to defense, right? You want to
Yeah,
survive. The initial goal is just surviving, right? If you're you know have a lot of parameters in place to sort of pull the plug on your account if you start violating certain risk parameters and you live to fight another day. Um,
yeah,
right? I mean,
absolutely. I
the
mean,
the idea is like if you use a war analogy, right, and you're trying to defensively, right, and say you're if a general expected to win every single battle, that would be unreasonable, right? So
oh yeah,
if the first battle he loses, he just goes all in and then loses the war on that. Like you're never going to win the war. You have to you have to do tactical retreat. You have to manage your risk. You have to live to fight another day.
yeah.
So
That would be, in poker terminology, that would be some sort of a tilt, I guess.
yeah, yeah, and
When you lose a hand and you think that the next hand you're gonna go all in and make it all back, and all of a sudden you're broken, right?
yeah, exactly.
But it's not like that.
Well, it just the
That's
other thing
revenge
is,
trading.
sorry, go ahead.
Yeah, function.
That was the revenge trading, isn't it? That's what that one comes from, isn't
Yeah,
it?
Yeah. Basically, yeah.
Falling down a hole.
Yeah,
It's interesting because you have to be aware of that hole because it's difficult to get out of. It's really,
absolutely.
really difficult to get out of because you get blindsided because you've got so much adrenaline going through you when you suddenly see such a big
well,
loss and it
the thing
spikes
is,
your emotion.
that brings up a good point is that you need some sort of parameters, a risk profile that will manage risk before you're even aware of the fact that you're in a drawdown
Yeah,
or on tilt. And the reason why is because it's by the time you're aware of it, you're so far into it that you need a risk profile that starts managing your risk well before that.
yeah. I
And
mean,
Ironically, until you'll actually start to build a risk profile, you'll have fallen down the hole once already in order to make you learn about it. I don't think anybody has learned about it and not fallen down a hole. I think everybody has had to fall down a hole to then reevaluate it.
well, I mean, I think you need to burn yourself before